librarian Amanda Chan. Hey, it's 2010. Are you still looking for your perfect dream home out there? I really think 2010 should be your year to settle down. Now, if you are a house hunter, first-time home buyer, I came up with top 10 reasons why you should buy a home in 2010. Now let's move on to the top of our list. Number 1 is the historically low interest rate. Now look at the screen right here that I have a 30-year chart on a 30-year fixed mortgage rate. Indicate in 2009 we're paying 5% on the, interest loan for a 30-year fix. Back in the 80s we're paying, if you want to get money from the bank, you pay 18%, which is ridiculous. And even you thought, hey, back in the 1970s it's got to be much lower because inflation and all that. Guess what? You are wrong, because back in the 1970s you would be paying 7.25%, and it's still higher than what we have today. So that makes it our number 1 reason. Let's move on to the number 2 reason, is a low home price. Now home price has been corrected, and in some area, most area would be 20%, some area up to 50%, unfortunately. So now, don't you think it's a good time to buy, because everything is in discount? I like to buy things in discount. I don't know about you. So that makes it our number 2 reasons. Number 3 reasons is low down payment. Now I know that the bank still require 20% down, and they want this, they want that. It's just really a pain. And guess what? Yesterday I just received an email from my loan officer telling me that some lenders, not all of them, some lenders, they are willing to loan up to 90%. Now, which is good news for some people, because if you have no other choice but going for a conventional loan, that 10% is now another option that you can consider. And for some home buyers, they can qualify, and probably in some area they can qualify for FHA loan. That may not be a bad option neither, because FHA loan only require 3.5% down. Number 4 reason is high inventory. Now what that means is in most area you could have a lot of homes to choose from. For a buyer, that's great news, because first, you have a lot of homes to choose from. You have more leverage, you have more negotiation power, because you might have 10 sellers, wanting your offer. It's like, please make me an offer. Now, but again, please understand this situation may be a unique situation in some particular area. In some area, maybe a complete opposite. Number 6 is tax credit. Well, I'm sure you haven't forgot the $8,000 first-time home buyer tax credit. And if you're not a first-time home buyer, you happen to have actually own your home right now and wants to move up, that's another tax credit available for you. Like in the state of California, we can use $8,000 first-time home buyers tax credit. The other available still, of course, is the home buyer 6,500 tax credit, as well as we have a new home $10,000 credit, and a couple others that you might be able to enjoy. So please check with your area, but don't leave any money on the table. Next one is number 7, is tax deduction. Now take advantage of that, because since you own your home, you're paying mortgage, interest, as well as taxes, property taxes, as well as maybe possibly some other closing costs may be deductible. But make sure you talk with your tax professional, CPA, tax attorney. They can guide you through what is allowed, what is not, how can you maximize your deduction. For example, some people, they will use a home office. They may be able to deduct, but that's a certain guideline you have to follow, and make sure that you do the right thing. So number 8. Number 8 doesn't seem to be a relevant word today, but maybe a few years ago seems to be a very good word, is appreciation and building equity. Now remember, back in 2004, 2005, 6, 7, home price were up every single year. And we're talking about a astronomical growth, 10, 15, 20% growth each year. That is a bit of unhealthy. However, in a normal market, a normal situation, we might anticipate a 5 to 7% growth, which is a nationwide, average. Now, over time, real estate does go up, but if you're looking in the short term, 5 years or less, that may not always be the situation. So don't buy into the idea of, oh, I buy real estate, I'm gonna make money, because it doesn't necessarily happen that way. And look at what's going on right now. That's living proof. So number 9, make it to our number 9, is possible investment. Now, I don't want to confuse anybody, because this is kind of tied into the number 8 that we talked about earlier. Most people believe their home is an asset, is an investment. However, I don't totally agree with it. I'm a fan of Robert Kiyosaki, and if you have read his book and his philosophy, your home is not an asset, it's a liability. Just think of it, every month your lender is sending you a bill called the mortgage statement, and you have to pay. And if you don't pay, guess what? They come and get the house and kick you out. So think of it, really, there is no guarantee that your house is gonna go up. I'm sure you already know this by now. I don't need to elaborate any further. Last but not least on our list is capital gain and tax relief. Now this one is by the IRS. The IRS said if your homeowner lives in your home primary residence for 2 years or more, and you have a gain of, if you're single, you can have a tax-free gain of up to $250,000. Or if you are a couple, married couple, you can have the gain up to $500,000. So it's tax-free money. That's one last reason why you want to buy your home in 2010. I'm your librarian, Amanda Chan. Thanks for watching the Real Estate Library, because that's a smart move.